Good evening, ladies and gentlemen, and a happy new year to you. Thank you for being with us here today for Wipro's Q3 FY23 press conference. To those watching the live stream, thank you for joining us. Let me quickly introduce you to our management on stage who will be addressing us today. We have with us our CEO and MD, Thierry Delaporte, Stephanie Trotman, our Chief Growth Officer, Jatin Dalal, our CFO, and Saurav Govil, our CHRO. A special welcome to Amit Chaudhary, our COO, who is joining us for the first time. With that, I will now hand over the stage to Thierry for his opening remarks. Over to you, Thierry.
Thank you, Purnima. Good morning, good afternoon, good evening, everybody. Welcome to Wipro. It's absolutely great to see you all again. Thank you for joining our third quarter results. From our entire leadership team, I'd like to wish you a fantastic year ahead. Okay? We are optimistic about 2023 to deliver groundbreaking work for our clients and continue on a growth trajectory. We'll talk about some of the opportunities that are ahead of us. Joining me today is our CFO, Jatin, our Chief Growth Officer, Stephanie, our CHRO, that you all know, Saurabh. But as Purnima said, I'm pleased to introduce you for the first time to our new Chief Operating Officer, Amit Chaudhary. Earlier today, we reported our third quarter results. I'm pleased to share that we have delivered another quarter of double-digit revenue growth. Record order bookings of over $4.3 billion, led by large deal signings of over $1 billion. Margin expansion of 120 basis points. A huge surge in cash conversion. And a fourth straight quarter of lower attrition. Let's look at the market. The macroeconomic uncertainty we had discussed last quarter, if you remember, continues. However, tech spending remains robust. Our clients, they're looking for value-driven transformation, tighter governance, and improved return on investments. Cloud transformation continues to be a priority, even as we see a higher focus on returns. It's against this backdrop that we have delivered our highest ever bookings in total contract value terms. Clearly, the investments we've been making in our clients, our efforts to bring about a shift in our portfolio and proactive deal shaping are all paying off now. On a year-on-year basis, our bookings in total contract value terms grew 26% year-on-year in Q3. We signed 11 large deals with a total contract value of over $1 billion. This strong booking trajectory translates into a 50% year-on-year growth in our large deal bookings on a year-to-date basis. Our pipeline of large deals is both strong and diversified. If we look at our business, 3 of our 4 markets grew more than 20% year-on-year in total contract value terms as well. Some interesting insights here worth sharing. 1, our strong bookings were driven by Wipro full-stride cloud services and engineering services. These grew at 25% and 45% year-on-year respectively. Our large deals include new and existing clients seeking a transformation partner or going through a vendor consolidation. Renewals with existing clients are often accompanied by services expansion, taking market share from others and expanding into new areas of our clients' businesses. The deepening of our relationship with our clients is driven by our innovation solutions, by our improved delivery execution, for sure, higher customer satisfaction scores, I'll come back to that, and strong ecosystem partnerships. In fact, our customer satisfaction score has improved versus the previous such audit by 10%. The strong order booking proves that our business strategy is working. Our expertise in business transformation, coupled with decades of experience in delivering cost-optimal solutions, is the combination our clients are seeking in the market. A good example of this is a recent deal we signed with a US-based financial information, analytics, and rating agency. The project involves integration and management of their infrastructure and security estate. As their transformation partner, we will help them improve their future readiness at a lower cost. Now, let's turn to revenue growth. First, I'd like to note that over the last 10 quarters, we have grown at a very rapid pace. Our revenues have grown 45%, and headcount has grown by 40%. We're now a much bigger in size and with a breadth of service offerings and deeper client relationship. In Q3, we recorded our 7th straight quarter of double-digit growth, revenue growth. We grew 10.4% on a year-on-year basis and 0.6% sequentially in constant currency terms. Our sequential growth was impacted by furloughs and lower discretionary spending by clients. We have also continued to turn the tide on margins. The hard work we've put into improve our supply chain, delivery excellence, and operations automation has resulted in greater efficiencies. All this has contributed to a margin expansion of 120 basis points quarter on quarter. Our operating margin is now at 16.3% versus 15.1% last quarter. I'll ask Jatin to talk to you in more details about margins shortly. But I do want to mention that this margin expansion is actually after absorbing the impact of 3 full months of salary increases that we've offered to our colleagues. It also, to keep in mind, it also factors quarterly promotions, as well as the restricted stock unit we've granted to our senior employees. Another good news has been on the cash conversion side. We saw robust cash conversion for the 3rd quarter at 143% of net income. I will now share some more details on our service offerings and sectors and how we are continuing to increase market share. As always, let's start with Americas 1. Our Americas 1 business grew 11% year-on-year in Q3. The fastest growing sector in that market was actually communication, media, information services, which grew at 14% year-on-year. Now let's look at Americas 2. This business grew 9% year-on-year in Q3. Manufacturing led the pack with more than 18% year-on-year growth. Besides, energy and utilities, securities, capital markets, and insurances also recorded good growth of more than 12% year-on-year. Order bookings, then they grew 40% year-on-year. Our business in Europe actually has continued to be a strong pillar of growth. Double-digit growth for 7 quarters in a row. Europe delivered a year-on-year growth of 12% in this quarter. Almost all the markets in Europe grew double-digit, led by the Nordics, the UK and Ireland, Germany, and Southern Europe. The order book, in total contract value term, grew at 25% on a year-on-year basis. Finally, our APMEA, Asia Pacific, Middle East and Africa business grew at 7% year-on-year in the third quarter. Regions that did particularly well during the quarter were Southeast Asia and the Middle East. So here, our transformation efforts in this region have started yielding results. This quarter, we closed one of our largest deals in this market. Order booking grew 22%. The pipeline is also strong and healthy. Overall, we've continued to strengthen existing client relationships, and I know how passionate I am about it. I am pleased to share that our top 10 clients grew 15% year-on-year. Now, I talked about the market. Let's talk about the service lines, service offerings. From a service offering standpoint, I'll start with ideas. Our ideas global business line grew 12% year-on-year in Q3. This growth was led by, one, cloud transformation, which grew 27% year-on-year. Second, apps and data, which grew 18% year-on-year. Third, digital experience, which grew 16% year-on-year. And finally, engineering services, which grew 12% year-on-year. Now, looking at the iCore side of the house, our iCore global business line grew 8% year-on-year in Q3. Cybersecurity led the growth at 16% year-on-year, followed by digital operations and platform growing at 9% year-on-year for Q3. From a total contract value terms, cloud infrastructure services, our CIS business as part of iCore, grew over 50% year-on-year. CIS revenues, by the way, are lower as we continue to rotate our existing portfolio and move towards the cloud at full speed, which is center to our strategy. At the same time, we are signing longer-term deals with clients in this business. We're continuing to evolve our full-stride cloud services business, creating new industry offerings and working together with our partners, which is, I would say, helping expand our market coverage. Full-stride cloud services continue to be a high-growth area for us, contributing to over 1/3 of our total revenues. Our cloud expertise spans the entire spectrum of cloud services, from cloud strategy, migration, modernization, to full-stack industry platforms, solutions, and running and optimizing cloud. Partnerships continue to be a source of growth as well. Bookings with hyper-growth partners in Q3 continue to be strong, nearly $2 billion. That's a 35% year-on-year growth. Bookings through hyperscalers today stand at 44% of Wipro's total bookings in terms of total contract value terms. But besides cloud, we are expanding capabilities in artificial intelligence, in data, in engineering, increasingly going to market as one Wipro. And these investments are getting noticed. A US-based energy company has selected us to build an end-to-end greenfield, fully automated warehouse in Europe. The project will actually allow the client, to manage large sums of chemical storage while maintaining strict health and security requirements. This win brings together our domain, engineering, digital, cybersecurity, and health and safety capabilities. But it also underscores how our advisory capabilities, technical and engineering expertise, are differentiators for us in the market. Let me turn now to our most important asset, our people. I'm pleased to share that attrition, famous subject, continues to drop for the fourth straight quarter. In Q3, attrition dropped to 21% on a trailing 12 months basis. Our quarterly annualized numbers, which dropped 360 basis points Q on Q, are now at 17.5%. We're confident that our focused talent strategy will result in continued moderation of attrition in the coming quarters as well. Second, we are recognizing and rewarding our talent, promoting a record number of colleagues in FY23, the highest ever, in fact, with 30% more promotions than in the fiscal year 22. Our leadership team's breadth of experience, high performance standards, and strong collaboration continues to fuel our growth and transformation. And finally, I'm encouraged to see more diversity in our leadership ranks, which has been a focus for the past several years. Definitely, we have more work to do here, we know that, but one promising change worth sharing is that we have more than doubled the number of women in senior leadership at Wipro. As these visible, impactful leaders progress their careers, they demonstrate the impact diversity has on our clients, on our business, and on our people. We've been strict, really strict, about maintaining the focus on talent quality, high performance orientation, and inclusion in our graduate hiring as well. Year to date, we have hired and onboarded more recent graduates than the whole of previous years, and actually more than ever before. Now, I will close with an outlook for the full year. We expect full year revenue growth to be at 11.5 to 12% in a constant currency terms. On margins, our Q3 number is now, I would say, the new base, and we will look to improve it further. In summary, I will say that we had an excellent quarter with record bookings, sustained growth, and delivery excellence. Our strategy continues to pay off, and we remain on course. Now with that, I will hand it over to Jatin now for his comments.
Thank you, Thierry. Good evening, good afternoon, good morning, everybody. I'm going to share quick financial details. As you know, we grew 10.4% in constant currency year on year. Our operating margin expanded by about 120 basis points to 16.3 percentage point. ETR was slightly up to 22.9% compared to the ETR last year in the same quarter. And as a result, we posted a significant growth in net income sequentially, which was 14.8% and 2.8% year on year. Let me talk about working capital. Working capital management continues to strengthen further. This quarter, our operating cash flow was 143% of our net income. We closed the quarter at a net of debt cash of $2.7 billion and a gross cash of $4.6 billion. As you know, the environment on currencies remains quite volatile. Our hedges at the end of this quarter were $4 billion, and the realized rate for quarter 3 was 82.24. We have guided for the full year in constant currency terms between 11.5 and 12%, as Thierry mentioned, at the exchange rates which are mentioned in our PR. And we'll be very happy to take your questions from here. Thank you.
We'll take questions now. Please unmute, introduce yourself, and go ahead and ask your question.
Yeah. Good evening. I'm Uma Kannan from the New Indian Express. So So, do you expect clients to cut spending in Q4, and how the conversations are with them? Yeah. And also, can we see inorganic growth continuing in FY24 as well?
Okay. So I'll start with the first question. All right, thank you. So client cutting on spending. I believe clients continue to see technology as a driver of performance for them. Clearly, when we look at the performance in bookings we have had in this quarter, there's frankly no real reason to believe that there is any slowdown in the demand. Now, there's a certain level of uncertainty. What I think it says is that clients will continue to see technology as a driver, but might be a little bit shifting their priority towards type of deals that are delivering rapid return on investment, that are focusing on efficiency and more possibly also considering reducing or slowing down discretionary spending. So that's my first answer, and I would say to give you another perspective on the evolution of the market, we are expecting to do another strong performance in bookings in Q4. Okay? In terms of M&A, our strategy hasn't changed. We continue to focus on strategic opportunities. We do not have any target in mind when we start a year, and we haven't changed our strategy now for the last 10 quarters. We are focusing on identifying companies that are bringing capabilities, expertise in a sector or in a given market that would complement our own position around the strategic offerings such as cloud, data, engineering services, digital transformation, and cybersecurity. Okay?
Yeah, one more question. You were talking about Middle East, and you have strong presence there. Recently, you signed one contract with a financial application provider as well. So, how are you looking at ME market? Since you spoke about America and Europe, so ME Asia, how the future looks like?
Middle East is a large market for us where we have decided to invest significantly. We are already in a leading position. We are very material position in the region, and we continue to expand in some key areas, key specific sectors, banking, financial services, and insurance, energy and utilities are being the primary targets, and telecom being the third one. We have established Dubai as being the center, the headquarter of our region, and we are expanding in all the different countries of that region. So we are very bullish about our future in the Middle East.
Thank you.
Hi, Veena Mani from the Times of India here. Few questions on the HR front here. First, your headcount has dropped slightly in this quarter. What would the reasons for that be? Attrition has also dropped, interestingly. So, has the pressure on promotions and more jobs for your employees, is that pressure easing out for the company? Thirdly, what about also, do you see the attrition trend coming down? And with pyramid rationalization happening for some time now, and now because of market conditions, do you think you would rather hire more laterals over freshers in the coming quarters, and especially in the coming year? And on the variable payout for this quarter, what is the average likely to be? And if it's going to be 100%, then what part of your employees would be, what percentage of the employees would be getting that 100%?
So Saurabh, I'll let you with the 5 questions. I'll jump in.
I have to remember all the questions to answer all the questions.
Yeah.
So let me start with first on headcount. We had called it out that we would be investing in our headcount ahead of time so that we prepare ourselves for growth in the coming quarters. And that's what we have done. We have invested in the first couple of quarters, and we are seeing that trend going forward. Our utilizations are low. We see huge headspace for us to improve utilization. So from that perspective, there is no challenge to meet our growth needs from a headcount perspective. Attrition has been a good story. This is the fourth consecutive quarter for us, as Thierry called it out. We have seen a declining trend, and we see that going forward as well. It's also a function of with our markets, what's happening. That was the second question. On
Sorry, good.
on hiring, we continue to stay focused both on freshers and laterals. Our freshers hiring would continue. We have hired most number of freshers ever, and our fresher index has the best ever in our history. So that continues to be our focus, and lateral hiring will be depending on business needs across, and as and when demands happen, we will do that lateral hiring. The last was on in terms of variable pay. We have a very well-defined policy. Employees will get paid variable pay in Q3, and it will be a healthy outlook for them. So that it keep it that way from a variable pay perspective.
In Q2, you
Let me jump and address also the point of the promotion that is an important one as well. Our people is our number one asset by far. So managing the talent, growing our talent, growing our people is an obsession for us, a priority. Promotion is a reflection of that. In an organization that has grown 45% in the last 10 quarters, we need to continue to promote and accelerate the promotion of the people that have contributed to this outstanding performance. And I think the reality is that, the way we've looked at it is we have, investing in our talent, in our people, and, we are providing them with true career opportunities and progression in the organization.
And just to add, that has been a reflection on how you've seen, which is unique for us, I think, in the industry of 4 quarters of a declining attrition trend. So that talent becomes a very critical space for us.
would you be able to put like a number, as you said in Q2 there were about 10,000 promotions. What about Q3?
Q3 I can give you the exact number. It's about 6,000 odd for Q3. That's the number which is there for promotion.
Hi, good evening. I'm Haripra from Money Control, right ahead, yes. Couple of questions. One on your deal wins, obviously you've had 1.1 billion. What is the nature of client conversations been? Are you seeing more focus on cost efficiency rather than discretionary spend? What's the nature of client conversations? Plus, on margins, I wanted to understand, you've obviously expanded. By when do you see this go to, say, the 17 plus sort of range? And what's pricing been like? And on the on your outlook for Q4 is minus 0.6 to 1, right? If I'm not wrong. Are you expecting a degrowth in Q4? And so can you give us a number on the fresher addition for Q3 and what is expected in Q4?
Okay, all right. So Stephanie, Jatin, Stephanie, me. You go ahead, Stephanie.
I'll start with client conversations. So, the client conversations that we're having are really threefold. One is, how do we help them enable their business through digital transformation? And as Thierry mentioned earlier, it's still top of mind for all of our clients. So they're still spending on technology. What they're trying to do is spend wiser than they did before and really make sure that it adds value to their business. So the conversations are still aggressive, but different. Secondly, I think our clients are looking for simplification in their environments. We're seeing a lot of vendor consolidation, one for simplification and two for cost takeout. So where they can optimize and get more value from either their current providers or new ones, they're looking for that value, especially in these economic times. And we're winning in that space. We're renewing our existing business. We're expanding our business into new areas, and we're also taking market share in that consolidation process. So that's encouraging. And I think on the third point is really, when we look at growth in our our business and in the marketplace, we're looking with our partners as well, which is an investment that we've made, and it's paying off. So when we talk about opportunities, it's not just what can Wipro do for you, it's what can Wipro and our ecosystem partners do to bring you value. So it's a different conversation, quite frankly, than we were having 2 years ago, and I think that's why we're seeing the success that we're seeing in the contract bookings.
But is there any sort of softness in particular verticals that you'd like to call out?
There is no doubt that, I think I will surprise nobody, the technology sector that has known an incredible growth over the last quarters and years, actually, is, slowing down. So this quarter is certainly, it's a reality. And, we see that in the newspaper every day. I would say possibly the spend in the retail sector, in particular in America, might see a potential slowdown to be seen. You take this one on margin. Yeah. Don't promise too much.
No, thank you. Let me take you a couple of quarters back. What we said, when we said in the beginning of this fiscal that we made investments ahead of time on our talent. And we said that the margins will remain in 15.5% range for 2 to 3 quarters. After that, there was a quarter where we delivered 15.1, and in this quarter we have delivered 16.3. So I'm very happy with the way Team Wipro has come together and executed on overall operations and key levers which essentially drive margin in our business. Now, having already upped that pedestal to 16.5, which Thierry spoke about in his speech, I think this is a new base that we'll work on, and we'll see where we go from here. But very happy to be here. Thank you.
On the freshers, so around 3,000 in this quarter, planned 5,000 in next quarter.
Pricing? You see, I'm trying to make sure.
I wasn't sure if I was taking that or Jatin. I think we are seeing, again, the war for talent in specific areas is still there. So where you still see that pressure for talent, engineering services, cloud services, et cetera, I think we're seeing opportunities to improve our pricing. I think, if you look at our large deals, where we're doing transformation and we're delivering on outcomes, we see an opportunity to get value for that outcome that we are delivering. And I think we continue to experience pressure in parts of the business that are more mainstream. So it's a balance.
Yeah, exactly. The key word is the last one, which is no real change of pattern, frankly.
Hi, Sai here from the Economic Times. So, Thierry, my first question is, in your opening speech, you had said that sequential growth was somewhat impacted by the discretionary spend, right? I just wanted to know whether it was one-off or is it like a structural impact you're seeing? And Jatin, to you, in your quote, you had said that some of the margin gains is because of the automation-led benefits. So how should we read into this? Do you think, again, this is a long-term play at your end? And also to you, Saurabh, you said that you're adding 3,000 and 5,000 freshers, right? Even in that case, on an aggregate basis, I think you'll be way off your 30,000 year target. Well, for the year you had given fresher target. So how should we read into this? Thank you.
Okay, so I'll take it. Someone should be nice and have a difficult question for Hamid as well. Just. I think it's the operation. Okay, I'll take the first one though on the perspective. No, nothing structural in the market. I think macro uncertainty drives a certain level of volatility around discretionary spend. Is point one. Point two, I would say is. If you look at deals around consolidation, for example, that we are winning in the market, there's always a bit of a lag for the ramp up to happen. There's a time of transition, and so for us, it's more just a little bit of lag between the conversion of this strong bookings we've delivered in Q3. And again, bookings looking rather promising so far for Q4. There's no reason to believe that growth will not be here for the next quarters. Absolutely.
So Thierry, I have.
No. So now there's one for Jatin, and then.
So I have another one for Amit. That's right.
Okay.
Okay. So I'll start off on certainly, our whole business relies on how quickly we capture the efficiencies, that automation, that new work, new technologies that can provide to us. And certainly for not only Q3, but even for Q2, those efficiency gains have been a major contributor, the way we have improved our operating margin. And I'll request Amit to talk about his vision, because that falls squarely in his area.
Thank you, Jatin. And just building on that, we are going to continue to invest on delivery excellence. Automation is going to be a component of that. Managing the pyramid is going to be a component of that. So we are looking at multiple parts of how to manage complex projects, how to bring one way of delivering on Wipro. So you will see a lot of investment around the delivery excellence dimension from us.
And yes, we decide on how many freshers to hire last year, to be onboarded this year. The world has changed, as you know, it's very different. So we'll be slightly lower than what it is, but still the highest ever we have hired, both in the current quarter and the current fiscal, and going forward. So I don't see a challenge from a talent perspective on freshers.
Yeah, the fundamental point here being that the strategy doesn't change. I mean, it is clear for us that freshers, young graduates, are essential to our development. And, we have shift gears versus what we used to do before around, onboarding them and injecting this talent, if you like, in our program, invest in them, grow them to become, high performers in our organization in the years to come. And that will continue.
Yeah, hi, Ayushman here from the Financial Express. Thierry, I'm not sure if you have addressed this, but once again, if you can just give a sense of, do you expect Q4 to be sort of softer than Q3 because of and you have also given a negative growth guidance, right? I mean, minus 0.6 to 1. So, and Stephanie, if you can just give a sense of really what drove the large deals this quarter, and then I will ask the next.
Yeah. So covering the point on the growth, let me start with the following. When we are driving a business and looking at, the trajectory over time, it's 45% growth over the last 10 quarters. That is what has happened, okay? In the meantime, the performance on bookings continue to be good. We have more backlog to turn into revenue than we had before. Okay, so I would say the opportunities for us to win in the market exist. Our ability to win in the market are here. We are proving it. And one thing that is new is, as opposed to, I would say, a few years ago, we are now going for large deals. We are winning consistently large deals quarters after quarters, which is basically the promise of what we had, the strategy we had built back mid-2020. What has happened? What is happening in Q4? And it doesn't seem to be uncommon in the industry for Q4. Is certainly a little bit of a lag and a certain level of volatility from customers, in particular in some sectors that I mentioned before, regarding discretionary spending. Okay, so that is happening. There is a certain level of uncertainty, clearly balanced by the volume of business that we win, but still there is this uncertainty that exists and is impacting some of our company clients. Second is what we are observing is clients make decisions. So it's not like decision process is slowing down. I don't think so. We're not seeing evidence of that. We would always want clients to decide faster, but that isn't a new news. But what's possibly happening is that the ramp up of those projects, those programs, because of the size, because of the precisely uncertainty, take a little more time. And therefore, this potential lag that exists between the moment you win a contract and the conversion into revenue.
In regards to the large deals, so I think it started really with the journey 2 years ago to create the Chief Growth Office, which was a vision that we had, and really creating a growth mindset within Wipro to be bold in terms of how we bring our services to market as one Wipro and really bring all of our capabilities to bear for our clients. And what's been really exciting as we've built the large deal team and deployed them in the markets, we're seeing the results of the talent that exists in our GE community and our sales community to really drive those conversations with our clients and to earn their trust and confidence to be their transformation partner. So that's part of it. I think the other part, and by the way, we're expanding that team. So it is, we're seeing a lot of opportunity for us in the marketplace, which is why we're also excited about our Q4 pipeline. It's quite strong. And this quarter in particular, we won large deals in each one of our markets, which was a first for us, at least in the past couple of years. So we're not dependent on one region or another. We're really seeing it, come to life in all of our markets. So that's been our strategy, and it's working.
All right. My next question is to Amit. Since you have joined as the COO after quite a bit of gap, so what would be your top 3 priorities in your new role, if I were to ask that? Yeah.
Thank you. So it's very simple. The first priority is agility. In our current market, it's very important to have an agile organization that can adapt to where the market is going. That'll be based on simplifying processes and investing in technology. The second priority will be around delivery excellence that I talked about. So I'll not repeat all the components, but I will add that there'll be a preference of build over buy within, so do more with what our internal growing talent. And the third will be around internal efficiencies. So we'll be looking at all the internal processes, internal things, and looking at for efficiency around that. So to summarize, it'll be agility, delivery excellence, and internal efficiencies.
Saurabh, have you disclosed the net addition of employees?
It's in the data sheet.
Okay. What is it? If you can just help me out.
It's a quiz.
It's a slight decrease from last quarter. Slight
Increased, right?
decrease.
Decreased.
Decrease.
Okay. Yeah.
Very marginal. Yeah.
Hi, guys. This is Haripriya from Hindu Business Line. So globally, there has been a pressure on the consulting business, and given that you have acquisition the same, so where do you see that? What is your reading of that market, and specifically for the BFSI sector, given that it's a bigger growth market for you, is there any caution to call out there?
So the first question, clearly, we consider that the consulting business is a fundamental part of our business to really drive strategic discussions and elevate the level of our discussions with our clients, to allow us to not only be the answer once they have a plan, but also help them elaborate plans and define priorities. So our consulting teams that we've enriched over the last quarters are allowing us in every market, in the chosen sectors, to really elevate the discussion and completely change the discussions we have with our clients. Hence the growth we have been able to get with these clients. And the results of these business units that we've acquired, if you look at the consulting business, consulting, Capco, Rising, but also the business that we've grown organically, has delivered outstanding results. Okay, they are like the other business, affected by potential slowdown in discretionary spend, which is a short-term phenomenon. The second part of your question was around
the BFSI segment.
BFSI segment. We are doing well in BFSI. We are winning in the market because precisely the quality of the discussions we have with the clients has changed, more strategic. We are able to be, bringing technology, but combine it with a deep understanding of their business, of their industry. And we are winning in the market every day.
I'm back with one more question. So, of the on-campus and off-campus hires this year, how many have you onboarded already, and how many of those onboarded have already been deployed, have been put on projects?
So we have onboarded around 17,000 plus for the year, for the first 3 quarters, freshers. And it's a continuous process of training and deploying, because our, as we call it, the fresher index, which is the number of freshers in a particular project, is the highest ever for Wipro as we speak. So very clearly, everybody is getting deployed in a period of time, and we are also continuing to onboard every quarter. I think that's the way to look at it.
We'll take one online question. We just have time for that. Deal bookings have been at a record led by large deals. Do you expect this run rate to continue? Are there more large deals in pipeline? This is from Anisha of ET Now.
Yes, we do expect it to continue. We have a very robust pipeline for Q4 and also for the beginning of next year. And we continue to build that pipeline proactively to continue our growth momentum.
I think that's all that we have time for today. Thank you so much, ladies and gentlemen, for joining us.
Thank you, everyone.
Wish you all a Happy New Year once again.
Happy New Year. Have a great day.